Yes, I'm ready, sir. Good morning, everyone. So, welcome back to our revision lectures. The topic today that we are going to revise is a very important one from the perspective of exams. That is the cost accounting system. Plus, as per our schedule, we have to even cover job, batch, and unit costing. If you remember in our previous class also, while dealing with the topic of cost sheet, where we did multiple sums, we covered sums on this topic as well. So today we'll try to cover more sums on cost accounting, it being a very important and a very relevant topic for the exams. So yes, good morning, Manivanan. Yes, Yash, good morning. Tejas, good morning. Yes, whoever has doubt may start asking me. So first doubt has come from Yash. Sir, while calculating cost of closing stock, we have to take COP divided by units produced multiplied by unsold units. You are perfectly right, yes. So unsold are the units which are lying in stock. So your understanding is correct. But unsold goods may include opening. Exactly. And that is why I have used this term that you have to take what is in closing. Now, it may not be possible that opening is there for the reason that you generally adopt FIFO for the purpose of your stores management. So for the actual physical removal, we always follow FIFO. And whenever you are following FIFO, you also know that my first thing that is to be consumed is opening stock. Plus, even if you look at this practically in the real industry perspective, let us say we are in the first month of this financial year, that is April. Today is April 1st, April 5th, April 10th. I am having my sales order every day because my business is going on. So my sales are happening day basis. On 1st April, when a customer comes to me, what I am going to sell physically in reality also is going to be my opening stock only. Because my production, even if I start doing, or if I have any opening WIP which I'll complete, that will also take some time. So in reality, physically, what happens is FIFO only. So that is why I said that practically it will not be happening that you have your opening stock, which is lying. So basically, your unsold goods or the goods lying in closing would comprise of your fresh materials only. Now, if we go by the valuation where we have the weighted average method or any such method, which is a method of valuation, in that particular case, when I take up your question that if there is opening stock, then what? Then the answer is, in that case, obviously, you will be following the weighted average method for doing the same closing stock valuation. That is, in the numerator, you will take opening value plus cost of production divided by in the denominator, you will take opening units plus units produced and then multiplied by the closing stock. So whatever is the method of valuation that will decide the answer, correct? Now I have some queries in the form of some image. Sorry, but the image is not getting open in my PC. So you can better directly ask me the query because that image, whatever you have uploaded, is not opening in my PC better. Tejaswin,
Good morning, sir.
good
Uh,
morning,
sir,
better.
sir, it's a question from past examination, sir.
Okay.
Sir, last time I asked about ABC break-even point, na? Sir,
ABC break even point.
yes, sir. For
Uh,
when in ABC costing, when the question asks a break-even point.
okay.
In relation to that, sir, it was a question. like uh, like there were two cost units that were A and B, and
Hmm.
setup cost, distribution cost, and setup fixed cost was there,
Hmm.
and one unanalyzed fixed cost was there.
Hmm.
And after calculating the ABC, the second part asks that what is the minimum break-even point in units if only product A is manufactured after cost reduction. Sir,
Hmm.
they have in the answer they have taken a minimum cost of one production run, and after that they have calculated. But sir, if when I was calculating, I assumed it to be X, and from that I calculated. So the answer which they are getting is 38 boxes, whereas I was getting 33.
Firstly, so you are saying that when we are taking the fixed cost figure, in
Yes,
that they have taken the minimum one and you have taken it as X, correct?
yes, sir.
Now tell me one thing, beta. If you are taking it as X, it means your X may change with the change in the unit answer that you are getting.
Yes, sir.
But then will it be called as fixed then?
Sir, but they
Because
are
fixed is something which cannot change with units, na?
But sir, they are taking like a minimum of one production run, and after that they are solving it. But sir,
For the reason I'll tell you, it means it is what type of fixed cost, beta? It is the semi-variable fixed cost. Now, whenever there is semi-variable fixed cost, okay, I'll just show you. So that is BEP with semi-variable expense. Now, in semi-variable, there is one semi-variable which can be split into fixed and variable completely. So you have the formula, if you remember, difference in cost upon difference in units,
yes, sir.
right? Which we use in budget chapter also and which we use in marginal costing chapter also, where you break up the cost into two distinct entities, no problem. Then it will be fixed and variable independently and you solve by the normal formula. So this is the first one. But the second one, where your semi-variable cost is like this, where in your case it is the production run cost. So let us say in one run, I can make, for example, 50 units, correct? In
Yes,
one
sir.
batch or in one run, I can manufacture 50 units. Now for first 50 units, my cost is of one setup. Let us say one setup costs me 3,000 rupees, correct?
Yes, sir.
But the moment my production becomes 51 until 100, then I have to incur one more setup cost of again 3,000, right?
Yes, sir.
Is this your example? Is this your case?
Yes,
The
sir. Same, same.
correct.
Yes, sir. Yes, sir.
Now, since it is going to change with units, you have taken it as X, correct?
Yes, sir.
But then understand this, when you have taken it as X, this is what I was trying to explain. You have made it a completely variable cost because then in your case, it will be varying with each unit of your answer. So tomorrow, if your answer changes by 10 units, that X will proportionately increase by 10 units. Are you getting
Yes, sir.
mathematically? But the nature of this cost is from 1 to 50, whatever units you manufacture, it will be only 3,000. If you are manufacturing anything between 51 to 100, it will be 6,000. It will not vary with each unit, it will vary with the range. Correct?
So, sir, we can say that from 1 to 50, we have to incur 3,000. But as and when, even if we produce one additional unit, then more 3,000 will be incurred.
Exactly. So in this case, how do you find out the BEP, right? So we find out CPU, which is selling price minus variable cost per unit.
Yes, sir.
Then you find out a BEP, which is for the time being ignoring this semi-variable. So it will be your regular fixed cost upon CPU.
Yes, sir.
Let us say it comes, and you can just try this procedure, right? Let us say it has come 45 units, right?
Yes, sir.
So I get to know that, okay, my BEP may fall in the first range. So then now I again recalculate BEP because this is not final BEP because I have not considered the semi-variable. So I'll recalculate the BEP by now even considering semi-variable. How? By making a range. What is my first range? 1 to 50 units. What is my second range? 51 to 100 units and so on. Correct?
Yes, sir.
Now, by running this first step, at least I get to know from which range I have to start experimenting. This is the trial and error method of BEP. So since my initial BEP without considering semi-variable is falling in first block itself, first production run itself, hence I'll start evaluating it from here.
Yes, sir.
I did come 145. Now 145 is falling
Uh,
here.
Third
Then
production.
I would not have started from here. I would have started the experiment from 101, that is from the third production run onwards, right? Now, since you are
Okay.
saying they have taken minimum which is of one production run, right?
Yes, sir.
You try this step, you will find that ignoring semi-variable, whatever BP is coming, that BP is falling in the first range itself. That is why they have started from first range, right?
Yes, sir. 2000 units were for one production run, and I am getting 800 units.
That is why, correct?
Yes, sir.
Now, now, so you start from here, but you could start from any range. How it is decided from here? Is this clear now?
Yes, sir. Now it is clear.
Now, what
Yes.
you will do, now you will take semi-variable expense and you will take your fixed cost. Fixed cost is the same, right? Which will remain same in all the blocks, but
Yes.
this will vary block to block, right?
Yes, sir.
This total becomes my total fixed cost. So now you have a fixed cost which includes semi-variable and your regular fixed cost. Again, divide this by CPU, you get BP,
Okay, sir.
right? Now, originally what we were getting 45 will definitely be higher here because now we have even added the semi-variable component.
Yes, sir.
Hello.
Yes, sir.
Now, let us say this answer is coming as 53 units, right?
Yes, sir.
Definitely it has to be higher than 45 because now semi-variable is considered, which was ignored here, right?
Yes, sir.
Now, had it come 53, I would have said, sorry, this is not the right BPY because 53 is outside the range of this. Because the moment I have to manufacture 53, I fall in this range where this semi-variable would be higher.
Yes, sir.
So I will not consider this 53 as my answer. Then I'll come to this block where
Okay, sir.
semi-variable is for now two production runs and fixed cost is the same. Now I get another total fixed cost, which is slightly higher because now the semi-variable is of two production runs. I divided by CPU, I get my BP. Now let us say the BP which I'm getting is 76 units.
Yes,
It
sir.
is falling, very much falling in this range. So I will say yes, my final answer is this. And
Okay.
they have done exactly the same because as you said that here they are getting some 800, correct?
Yes, sir.
Which is very well falling in your first range because your first range is 2000, 1 to 2000, correct?
Yes, sir. Yes, sir.
Now they will consider the semi-variable cost of only one, which you are saying the minimum fixed cost, right?
Yes.
Plus the regular fixed cost because anyways it is going to be incurred.
Yes, sir.
Total fixed cost divided by CPU. And in your case, I'm sure it is falling in the first range
First.
itself
Yes,
because
sir.
the range is very wide. It is up to 2000. So
Yes, sir.
whatever is your answer is falling here itself. Hence, in your example, which we are discussing, you get the answer here itself. You need not go and check the second slab.
Okay, sir. Sir, the
So,
answer is like 4 times 1.11 units.
so it is falling in this block now because your block is 1 to 2000.
Yes, sir.
So it means you get your answer in the first block itself, which is the final answer.
So, sir, we have to do like trial and error method for the BVP calculation in such case.
In such case, this is what is the semi-variable BP. Again, see, semi-variable are of two types. One which can be split into fixed and variable component for which we have the formula for splitting. If that is the
Yes.
type, no problem. But wherever the semi-variable varies with a range, like in your case, with every 2000 units, I have to run one production run extra. So it means my semi-variable is of this type. It is also called as the step semi-variable cost because the graphical format is of steps, correct?
Yes, sir.
So for that, you have to follow this trial and error approach where you first find BEP, ignoring semi-variable. Why to do this? So that you should know from which uh, block you have to start experimenting, right?
Yes, sir.
Now, these blocks are the blocks of your semi-variable cost. That is from whatever range it is going to change, those are your blocks 1 to 50, 51 to 100, and so on. In your case, 1 to 2000, 2001 to 4000, 4001 to 6000, and so on. Correct?
Yes. Yes, sir.
Understood, beta?
Yes, sir. Thank you, sir. Got it.
Perfect. Great. And I think you said it is ABC. It means, as we were discussing in the previous class, that at this level, it will also happen that even though the question asks is of marginal costing, but they have brought it, merged it with the topic of ABC by taking the cost details like what you get in ABC chapter. Correct? So that is what is again a very interesting part of our professional level exams, where we are not looking at any topic independently. It will always be merged. Yes. And that's great. It should be merged. Right? Excellent. So should we now go ahead with our revision topic of cost accounting? Now, as I said, it is a very relevant topic for exams. So I'll request everyone to be very focused, because this topic will be affecting you in terms of marks. Affecting means it will be helping you getting better marks. So let us start. Now we all remember cost accounting in costing. So cost accounting basically deals with passing the journal entries and preparing the ledger accounts. Generally, it is always the ledger accounts which are required to be prepared. Just for a short recap, we have these accounts which have to be prepared. For material, the account is stores ledger control. So we call it is in short as SLC. This is the materials account. You have to always keep at the back of your mind what that account is, so that passing of entries is easy. So for the materials cost, you have the SLC account, stores ledger control. For the wages, which is our labor cost, you have the labor cost control, or instead of labor, you can also write wages cost control, but more preferred term is labor cost control. So this is your second account. And then for the three overheads, we have the production overheads cost control, we have the administration overheads cost control, and we have the selling and distribution overheads control account. So broadly, you have these five accounts which represents your expenses or cost: material, labor, and the three overheads. Now you have your product accounts. For every product, you open a WIP. So here we have the consolidated WIP of all products called as WIP control. Then for each product, you have the finished goods. So here you have the consolidated finished goods, which is the finished goods control account. And again, we have the account called as cost of sales account. So for every product, you will be preparing independent WIP in the WIP ledger. However, here in your main cost ledger, you will be preparing the WIP control. Same thing for each product. You'll have separate finished goods in the finished goods ledger. Here you will have a consolidated for all products, that is why finished goods control, and similarly cost of sales. And then after this, you have the cost P&L. Now, till this point, irrespective of the method of accounting, whether it is integrated or non-integrated, your set of accounts is the same, even for integrated, even for non-integrated. But what changes between integrated and non-integrated is the accounts after these accounts. So until these accounts, the ledger, the cost ledger is same, whether you are following integrated method or non-integrated method. Now, after this, what changes between the two methods is, if you are following integrated means where you have no separate financial books, your financial books and your cost books are merged. That is why it is called as integrated. So now, for the purpose of all financial accounts, we prepare the independent assets and liabilities accounts. So you have the debtors, you have the creditor, you have the fixed asset, you have the capital, you have the reserve, and you have the cash and bank. Now, these set of accounts will be prepared If the method is integrated, that is where separate financial books are not prepared. You have only one set of books for both type of records, cost records also and financial records also. But if your method is non-integrated, which is generally the one which is asked in exams, so instead of preparing all these separate accounts for each asset and liability, you prepare a combined account for all these assets and liabilities called as the cost ledger control, that is CLC, or the general ledger adjustment, GLA. So this one account will represent all these accounts. So this will happen if your method of accounting is non-integrated, correct? Fine, students. So this is how your cost accounting is done. Now we will take up few practical sums to understand exactly how these entries are passed, to understand exactly the actual working and treatment. So I'll request everyone to be ready with your notebooks, pen, calculator, so that our working would be fast and we should be able to cover maximum number of sums. Okay. So the sums which I have selected, I have purposely taken all the lengthy sums. You may even get a smaller sum with lesser adjustments, but I have taken all the lengthy so that all possible adjustments are covered in our revision questions. So now, interestingly, the first point that you have to always address in these sums is which method of accounting is followed, whether it is integrated, whether it is non-integrated. Now, at times, the question may spell out this like, so the question itself is mentioning that your cost accounting is not integrated. But had this not been given in the question, let us say the question had only mentioned the company operates a historic cost accounting system, but they have not mentioned this. Even if it is not mentioned, you can easily make out whether this is a question of integrated or non-integrated, how. So if I take you further, you will find that whenever your opening balances given in the question contains these opening balances, fixed asset, debtors, share capital, creditor, profit and loss, means these are the typical financial books accounts. So whenever your financial typical books accounts, your creditors, bank, all these are given in the opening balance, it means the method is integrated. See, these accounts are the typical accounts which are required for costing. This will be present in both set because that is required. But for completing the double accounting, for completing the double entry, we need the assets and liabilities account from where we can complete our double entry. Now, in case of integrated, you will have these balances. Whereas if you go to a non-integrated accounting sum, either they will give you this balance, which is of the CLC account or the GLA account, or even if it is not given, because many times this is not purposely given so that you can identify it yourself. So even if it is not given, still this sum becomes the sum of non-integrated. Why? Because this can be found out as a balancing figure. This is what we'll try in this sum. So let us say this balance is also not given as opening, but I can find out this by the simple accounting approach of balance sheet. But this will be a non-integrated sum because for being an integrated sum, you compulsorily require the opening balances of these separate accounts. So only where in the sum the opening balances of separate accounts are given, that becomes a sum of integrated. Otherwise, the question remains the question of non-integrated. Fine. So let us now solve this question. So if you see, the opening balance covers material, that is stores ledger, WIP, FG. So these are the common typical opening balances because these three represents the three stocks, WIP, FG, and materials. Besides this, this question has a new adjustment which is not common in all these sums, that is of building construction. So what it represents, that the factory building which you require for your business, you are constructing yourself. So till the building is under construction, till it is not complete, you have opened a separate account called as building construction. The moment the building will be completed, it will be transferred to your common building account where you show the completed building values. Fine. Besides this, you are given the transaction that has happened during the month, and on the basis of these two details, that is the opening and the current transactions, we are required to prepare the relevant control accounts, right? So let me start. So my first account is the material account. Students, I'm just using short form for the purpose of time saving. Then for labor, we have LCC. Then I have the production overheads control. In this sum, if I see the details, they have merged selling, distribution, and administration. So I need not prepare two separate accounts. I will also prepare selling, distribution, and administration overheads control. Then I have my product accounts. And I have my cost P&L. Now, since this is non-integrated, I will have simply CLC account. But in this sum, you have one more new account, that is building under construction. So I'll open that, and then I'll prepare my common asset liability account, which is the CLC. This is clear to all students? I hope everybody is getting what we are doing. Now I take the opening balances, 80, 20, 4, 30, 10. 80, 20, 4, 30, 10. So these are my opening balances. So these are balance brought down. Since all are assets, they will carry a debit opening balance. Now, as I was saying, let us say this CLC balance is not given in the sum. No problem. We all know in our accounting single entry sum, wherever single entry sums were given and you were supposed to convert it into double entry, or you were supposed to find out profits. What we were doing, we were preparing the opening closing balance sheet. Now, when you prepared the opening balance sheet, the balancing figure in the opening balance sheet would represent some of the missing value. Generally, it is the capital account balance, but it may be some other balance also. So we used to prepare opening balance sheet, and the balancing figure in the opening balance sheet would give us some missing figure. Same logic is here. Since our accounts are completed up to the last month, last year, hence whatever are my opening balances should tally. So I have debit balance 80 plus 20, which is 100, plus 10, which is 110, plus 430, which is 540. Now it should have a corresponding credit balance, which will by default be your CLC, because CLC represents the net of all assets and liabilities. So it should match. So I have this opening 540 balance in my CLC. Yes, they just went perfect. So this is how, even if this opening balance is not given, you can still find out. Now, if you see, this opening balance also carries the same because it has to tally, correct? Now, We will pass the entries for the transactions given. So first transactions are related to material, material purchase, material issued for production, issued for maintenance, and for building construction. So one is given to production, so it is given to WIP. One is given to maintenance when I'm assuming the maintenance is of machinery. So production overheads control. Then one is given for building construction. Sir, is my video working properly? Audio, video? Because I am again I don't know why. Okay, 1 second. 1 second. Let's try from this corner. Okay. So now material issued for production, issued for maintenance, issued for building construction. I will immediately give the second effects. So to SLC, the second effect of this, then again to SLC, the second effect of this, and again to SLC, the second effect of this. In cost accounting, some times I have seen students finding difficulties, student finding challenges. For two reasons, I find this. One, that the names which are used are slightly complicated. I agree, and that is why I'm saying try to remember the generic names. That is what that account represents. So that will help you understanding and passing the entries. Second, I've seen that many times students do not like this topic because their end answers do not match. But the reason for the end answer not matching is that when you are passing these entries or you are making these postings, many times you miss posting the second effect. And whenever that happens, that you are not correctly posting the second effect of all transactions, you will also agree that it will not match. So that is where you have to be. Yes, Manish, I am also seeing my video, so it is stuck. Uh, Now I think it is fine. Let's see. Let's see. Okay. So I was talking about the entry students. So now I'm passing the purchase entry, which is 2 CLC. How much was my purchase amount? Purchase amount was 40. So immediately do the posting, both effects. So by SLC 40. So try to follow the students that you will pass all the entries upfront, both sides, to avoid any type of missing. Now we come to wages. First is your gross amount, which is paid or incurred, which is 150. So it is 2 CLC 150. Immediately second effect by LCC 150. LCC means labor. Now, out of this 150, they have given you bifurcation that out of this indirect wages is 40 and what is for building construction is 10. So when I do the posting for indirect wages 40, I have, and whatever is for building construction 10, I have to transfer it over here. But now the point is, labor account has to tally because labor will never have stocks. So there is a major amount which is missing, which is of 100 to tally it with 150. Now that is why this sum I have selected, because this sum has different adjustments also. Plus this sum also has some missing values also. Now, what is this missing value? That is what? Yes, very good, Tejaswin. So this missing value is my direct wages, which has to be transferred to WIP. So in WIP, I make this posting of 100. Is this clear to you all students? Yes, Anurag, very good. It represents direct wages. Perfect. Very good. So students, I hope you all are understanding what we are discussing. Yes, students. Let us then continue. So after dealing with wages, let us go to the works overheads adjustments. Again, be very clear with the language or the terminology they are using in the question, because that decides the nature of transaction. Once you understand nature of transaction, then identifying and passing the entry is simpler. So what it is saying, amount which is actually incurred. And this obviously excludes the above items, means material and wages, because that you have already posted. So this is the one which you are making payment in money form. So how much it is? It is 160. So to CLC 160, and in CLC the second effect by POC 160. Now, out of this, you have charged something to building and something is under absorbed. Now, whatever is under absorbed, cost accounting says that has to be posted, transferred to costing P&L. So we'll do both these postings. Building charge is 20 and under absorption is 8. So by building, it is how much? 20 and 8. And by cost P&L, this is for that under absorption, it is 8. So to POC 20 and in cost P&L to POC 8. Yes, correct, Tejaswin. No, Tejaswin, here we will not make a haste in finding out the balance. Why? I'll tell you. Because the question has some more adjustment relating to overheads. So had this not been there in the question, I would have concluded or closed this account here itself. But as you can see, there is some adjustment. So we will not make a haste. We will go step by step. So let us not close this account here, right? Now, next is royalty paid. Now, students, this is again a very important adjustment. Royalty is nothing but direct expenses. So in maybe some other question, they may call it as direct expenses paid. In some other question, they may call it as chargeable expenses. So you should know the parallel terminologies for the same adjustment. So either the name, specific name of that expense is given, or they may call it by the generic name or by the technical name. Now, in all these cases, what is to be done of direct expense? As you see, in our cost accounting format, we are not opening a separate account for direct expense. Why we are not opening? For two reasons. Reason one, in all sums of costing, whether it is cost sheet, whether it is this cost accounting, you will find that direct expenses appear hardly in 25% of the questions. 75% do not have this direct expense, because in practical costing also, direct expense may not be there, because majority of your expenses are either material labor or they are indirect, which is overheads. So that is why direct expenses practically also may be present only in very few industries or for very few products. That is why even in our questions, we find very less presence of direct expense. Because of this, we do not open a separate individual account for direct expense. Then what we do is we directly do the second step, which is the charging part. But To understand that charging entry, let us first understand what would have happened had you opened a separate account for a direct expense. So had you opened a separate account for direct expense, first you would have passed the entry for payment or incurrence of this expense by the transaction CLC. So in this case, for royalty payment, I would have first posted to CLC where the second effect would go to CLC. And then I would have done the charging by WIP. And the second effect would have gone to WIP. Now, since I do not want to use this account, I will directly pass the entry by doing both this. So as correctly pointed out by Tejaswin, my entry would be a direct entry whereby I'm debiting WIP and I'm crediting CLC. So that gives both these effects without opening a separate direct expense account. In this case, it is the royalty, right? So in my WIP account, I will directly write to CLC. For reference, I will write in bracket royalty. And in CLC, I will write by WIP. Again, for reference, I will write royalty. So this is the direct entry for royalty expenses. Sorry, it is 5. ठीक है. Now, selling and administration 25 and sales 450. By selling and administration 25 to CLC 25. Now, sales is directly posted to P&L. So by CLC 450 to cost P&L 450. Correct, students? Okay. Now, going to the further additional information. At the end of the month, the stock of raw material and WIP is 55 and 25. Now see, generally in questions, this is what we find out as the balancing value of these accounts. But in this question, they have given the balancing values. It means something else would be identified in these accounts as the missing value. So raw material closing is 55, WIP closing is 25. So raw material by balance carried down 55, WIP by balance. Correct? Now, the loss arising in the material account has to be treated as factory overheads. Now, there is some balancing figure in material, which is actually shortfall in material. Hence, it is loss. This they have already mentioned through their adjustment. Now, we'll just cross verify this. So opening was 80. You made purchases of 40. So you have total material of 120 at your disposal, out of which 50 is used in production, 6 in maintenance, 10 for building construction. So this makes it 60 and 55 is balanced. So this makes it 115. So the difference or the loss is 5, which they have specifically asked me to transfer it to production overheads. So call it as balancing figure. And then this 5, I will post it here. Correct, Tejaswin. You're right. So now ultimately my material account is settled. It is closed. Labor anyways was settled because I had already identified the balance and did the posting. Now what is left is POC. Now in POC, I had received 6 from material, 40 from labor, 160 which I incurred in money form, and 5 which I have received as the transfer of the losses in material account. I have till now charged 20 to building, 8 to cost P&L representing under absorption. So there is a difference, and this difference now represents the amount which I have to charge to production, which is again rightly identified by Tejaswin, that this is again the balancing figure which is to be charged to my production. And with this, this account is also settled. So immediately making the posting, production overheads control 183. Admin, it will go to cost P&L because no charging is mentioned. So this is also closed. Selling, distribution, and admin is coming to cost P&L. Now, in your WIP, since closing is given, we identify something else, which is how much production is done during the period. Generally, this is given in the question, so you find out this. However, in this, since this is given, now you'll identify this. So we will find out how much production has been done, and whatever production has been done will go to my finished goods account. Yes, again, Tejaswin is giving me the figure as 333, right? Correct, it is 333, Tejaswin. So this will be transferred here, 333. We are saying building under construction is completed. Okay. Now, before I close this, because there are two missing values, one is of which is sold, second is of closing finished goods. So this I'll have to find out. So in the meantime, they have said that this building which was under construction is completed. Had it not been completed, I would have done balance carried down, carrying forward the total cost incurred till date. But now they are saying this building is completed. Since it is completed, it will go to my assets, and my assets and liabilities are represented by CLC. So now, since the building is complete, let us transfer it to its main account, which is the asset account, which here is represented by the CLC. So it is coming to 44. Yes, correct, Tejaswin. Correct, Anurag. So this account is also closed. Now what they are saying, company's gross profit margin is 20% on sales. Now this is what is the adjustment which will give me the figure which I was looking for. Now, because of this, what I will get is, I will get the cost of goods sold, because you are given in the sum sales, which is 450, and you are given your GP margin, which is 20% of sales, which comes to 90. Now, when you deduct GP from sales, what is left to you is cost of goods sold. And whatever goods are sold, the entry is the cost of these goods is what is transferred from finished goods to my COS account. So by COS 360, I will mark here that working note 1, so that we get to know that this figure has come from the working note. Now I'll balance this. So I will find out the balancing figure, which represents my closing finished goods, or I will simply call it as balance carried down. Correct? So it comes to, I think, 403. Right, Anurag? Yes, correct, Tejaswin. Good, very good. So 403 is closing finished goods. Let me do the second posting of this in COS account. So to finished goods control 360. Now, whatever is the balance in my COS will at the end of the year go to cost P&L. So even this is closed. $360. And then in my cost P&L, I'll get my profit or loss, which will be transferred to my general P&L account or my capital and reserve account, which is again represented by CLC. So CLC is the amount of net profit which I'm getting as a balancing value. Correct? So I think I'm getting 57 as my P&L. Yes, Tejaswin. Yes, Anurag. Yes, thank you. This again I'll transfer immediately to CLC. So by cost P&L representing net profit. And now finally, I'll get the balancing figure, which is the last answer or last value I have to determine. How much it is coming? Please check and confirm, students. Okay, Anurag is saying 483. Tejasvi is saying 883. Anurag, 483 or 883? Okay, Tejaswin has corrected himself. So he is also now saying 483. Correct? So the final answer is 483. Closing balance in my CLC account. Now, in one of these sums, not asked here, but they may ask you to prepare a trial balance also. So if asked, we'll prepare this. Here it is not asked, but just for the purpose of giving you the feel wherever it will be asked. So particulars, debit, credit. So whatever are my closing balances in every account, I will put it here. So first closing balances of material. So I have my SLC, which is 55. Then there will be my WIP, 25. Then there will be my finished goods, 403. Here building under construction is completed, so there is no closing balance. Otherwise, I would have had a closing balance here also. And finally, I have the closing balance of CLC, which is 483. Now you can just cross verify that whether whatever accounting you have done is complete or not. So if it is matching both sides 483, it means whatever accounting you have done is complete. I'm not saying correct because there can still be error, principal error, or error of commission, putting it in some other account. But at least mathematically, our sum is correct. Fine. So this is a typical cost accounting sum under the non-integrated category. Great. Very good. Now let us take up a sum under the integrated category, right? Let me take you to question 3 first. So we practice a sum from the integrated category. Now this is slightly time consuming because you have to open here more number of accounts. So you have the SLC, WIP, FG, which are the typical account balances for any cost accounting sum. And besides this, you are given the balances for the other assets and liabilities, all these. That is why this question is of integrated. Now again, our sequence should be same. We prepare first all cost accounting related accounts. So SLC, LCC, POC. Now for selling administration, is it separate or combined? You'll get to know from the transactions. So see, administration, selling are separate. Now, relating to your products, then finally cost payment. Now, after all these accounts, now the difference between integrated and non-integrated matters. So here, since it is integrated, we will prepare all the specific ledger accounts for respective assets and liabilities. So what are these specific ledger accounts? So we start with debtors. You have creditors. You have fixed assets. See, you are given cash bank, but that you should take at the last. Okay, now provision for debt, provision for doubtful debts. Fixed asset, capital, provision for depreciation, provision for doubtful debt, right? Then you have the general P&L. And these are the balances that will come in the respective overheads account. So I need not open a separate account. So profit and loss and the most important bank. Now already you have a profit and loss here. So in order that you're not mixing up, let us call it as general P&L. And then the most important account, bank, because here majority transactions you'll find the effect in bank, right? So we have opened all relevant accounts. Now let us put the balances. 49, 50, 38, 675. 52, 325. Oh, bank is a credit balance, huh? Be clear. 22750 and 18200. 22750 and 18200. Then fixed asset 147, 875, 27300. 147, 825 and 27300. It is 875. One 182, 11, 375. 3725 6250. This is factory goods. 6250 outstanding factory goods. Prepaid administration 9975. And general P&L trade balance 72,800. So these are all our opening balances. So we all know we write to balance or by balance brought down. So that you are going to write. Great. Now we go to the entries for the respective transactions. Now see, wages are always given in two parts, direct and indirect. So in case of wages, the total wages incurred is 209,300. So it is to bank 209,300 and in bank by LCC 209,300, right? Now out of this, the breakup is 197,925 and 11,375. So 197,925, 11,375. Now this will go to WIP, the direct wages portion. Indirect will be posted or transferred to POC, and this account will be closed. So to LCC, the indirect portion 11,375, and here to LCC, the direct portion, that is 197,925. Correct? Now purchase of material 227,500. 227,500. Here 227,500. I should write to bank. Right? Then material which is issued for production 250, 250 and for repairs 4,550. 250, 250, 4,550. What is used for production will go to WIP. What is used for repair will go to POC. So 2 SLC 4,550. 2 SLC 250, 250. Students, please don't forget to make both the effects posting. If you miss, then it may be problem. Oh, yes, Tejaswin. Thank you. Tejaswin has identified, sir, this is not bank, this is credit purchase. So it should be posted to creditors. Correct. If nothing is given, we'll always treat it as credit purchase. So it is by SLC 227,500. Yes, Tejaswin. Thank you. Yes, Anurag, correct. So credit purchase hai, so I have put it in creditors. So instead of bank, we'll post it through creditors, right? Then, now next transaction is goods which are finished. So whatever is finished goods, we shift it from WIP to our FG account. So 489,125. 489,125. It is by FGC. And FGC is to WIP 489, 125. Sales 682, 500. Now, since it is credit sales, it will be posted through debtors 682, 500. And the second effect is in P&L. COGS 500, 500. Now, whatever is cost of goods sold is transferred here to COS from the FGC. Production overheads absorbed and production overheads incurred. Be very clear. 109, 200 and 91. This will come or routed through bank, and this will be WIP. So in WIP to POC 109, 200. Now, production overheads outstanding. Students, this is again important. Whatever is outstanding should appear as a balance. And since this is outstanding expense, it is a credit balance. But now, since we are closing the books, it will appear on the debit side as two balance carried down, 775. So in POC, I will have two balance carried down, 775. So this is the effect for your outstanding. Now, coming to administration, incurred is 27,300. So that will be routed through bank. Then you have selling expenses incurred. Again routed through bank. Right, students? Then you have payment to creditors, 229,775. 229,775. So bank will be credited because the payment is made 229,775. Then you have received from your debtors 659,750. Again routed through bank. To debtors 659. Then machinery depreciation. Now interesting, this expense will be posted in production overheads because in our overheads, the expense relating to factory, which are indirect, are posted. So we will post it in production overheads. Oh, it is already full. So I'm writing here 14,879. But the question is, what is the second effect? Second effect is depreciations account, which is here production provision for depre. So 14,879 will be routed through provision for depre. Correct? You will not post it in fixed asset. Had you not created a provision account, then only it would have gone through fixed asset. Otherwise, it is going through provision. So 14,879. Sorry, it is 789. Administration overheads is outstanding. Administration overheads incurred 33. Not incurred, charge 33. Where it is charged? It is charged to finished goods. So 2 administration overheads, 33. Selling overheads charge, 28,400. This is charged to COS. Now, provision for doubtful debts at the end. So this is your RDD at the end, 4590. So 4590 is your balance carried down because it is at the end. Correct? Now, once all postings are done, we will do the balancing. So here you will have the balance, balance carried down. This is already settled. Here you will have the under or absorption. So you have some debit, you have some credit. Difference between the two will be under or absorption. Same here and same here. Now, whatever is this under or absorption balance, it will be posted through cost P&L. So the difference will be transferred to cost P&L. Here again, you will have balance carried down. Here again, you will have balance carried down. Right, students? This amount will be transferred to cost P&L. So whatever is the total amount will be posted here to COS. And again, the profit or loss. Now here the profit or loss will be transferred to general P&L. Because we are doing integrated, so you have a general P&L account. So whatever is the net profit coming, that will be posted here. So from cost P&L to general P&L. Debtors, you will have balance. Creditors, you will have balance. Fixed asset, the same balance which was there in opening will be similarly for capital. Now, provision for depreciation. Again, the balance, the total of this will be carried down to the next year. Now, interestingly, students, you have this bad debts reserve or doubtful debts provision account. Opening balance was this, closing was this. Whatever is the difference will go to general P&L here. So to provision for the difference will be posted here, and whatever is the balance will be carried down here in general P&L. And then bank, you'll again have a closing balance here or here, depending upon whether it is positive or negative. Now, Yamini has a question. Sir, why administration overhead balance brought down and credit down is on the debit side? See, there is no such rule, Yamini, that the balances have to be on opposite sides, because firstly, administration overheads, production overheads, these are expense accounts. Technically, they should never have a balance because expenses accounts are nominal accounts. However, here they are balanced because they are representing outstanding or prepaid. Now, interestingly, in case of administration, one balance, that is the opening balance, is your prepaid, whereas the closing balance is outstanding. And hence, you are having it on the same side. Yes, I'll give you all 5 minutes. Kindly give me the balancing figures, whatever is marked in red. Chalo. Chalo, did you all find out the balances, students? Chalo, we'll proceed. Yes. Now, we'll go to question 2. Now, in question 2, we have something very interesting. We have a single entry type of sum, like how you have an account single entry. You have the incomplete record. Single entry means here incomplete records question, where some data is missing and other data is given in bits and pieces, and we need to complete it. So what is given? Following incomplete accounts are furnished. The period is October month. So firstly, you are given opening balances. Just correct it to 25. It is not 24. So it is opening balances are 1st October 25. Now, since this is an incomplete record sum, you will not prepare all the ledger accounts here because you are not given the details of all the ledger. So that is not required. So this is the sum which is solved not by our regular format of preparing all the accounts, but only by preparing the selective accounts for which details are given. So you have the SLC detail given, WIP, FG, then the factory overheads, that is production overheads control. Both means the same thing. They have purposefully given you separate accounts to confuse. One is factory overheads control, one is factory overheads applied. Applied means charge. We will put it in the same account. Then COGS and creditors. So these are the accounts which we have to prepare specifically without getting into the other accounts because the details of them are not present and in fact they are not even required. So we prepare the SLC. We prepare the WIP. We prepare the finished goods. We prepare the factory overheads. We prepare the COGS. We prepare the creditors for purchases. Okay. Opening balance SLC 54, WIP 6, finished goods 75. Factory overheads, the total debits is 45. So I'll call it as to bank 45. COGS, nothing is given for the time being. And purchases, again, this is 1st October 25. Opening balance for creditors is 30,000. Right? Okay. So with this details of balances, let us now proceed. Now, the factory overheads are charged using a budgeted rate on the basis of labor hours. So our ORR is based dividing it by direct labor hours. Now, they have given the budgets. Why budgets are given? So that you can find out the ORR. So the budgeted overheads is 675 and the budgeted labor hours are 450. So working notes, calculation of ORR. Budgeted overheads upon budgeted direct labor hours. So it is 675 and 450. Correct? So you will get ORR, which will be per labor hour. Right, students? Find out and give me that. Okay, they just finished saying, sir, ORR is 1.5. Anurag is also saying 1.5. Okay. ठीक है. Then the other data given is balance in the account of creditors on, again, the last day of the month is 15 and the payments made are 105. So balance 15, payments made are 105. So it will be 2 bank. Correct? Now, if you are given payments and closing, again, following the single entry approach, I will find the missing value, which is my purchases, credit purchases, right? How much it comes to? It is coming to 90,000. So two creditors, 90,000. Yes, Anurag, correct. Yes, they just win, correct. So this represents my credit purchases posted to my SLC account. I forgot to write the rate. So this rate is coming as 1.5. Now, finished goods closing balance 66. Buy balance 66. COGS during the month 195. Okay. Which will be transferred here to FGC 195. Right? On 31st of October, there was only one unfinished work in the factory. Now, what is unfinished is WIP. So this helps me find out my closing WIP balance because it is giving me as on 31st October. Now, the cost record show that you have charged rupees 3,000 towards your labor cost, and this is for 1,200 hours which are worked. Material cost which is charged is 3,000. So my working note 2 will be valuation of closing WIP material plus labor plus production overheads. This three will make up the value. Material is given directly the value 6,000. Labor is given 3,000. And for overheads, we have computed the rate and we are given the labor hours as 1,200 in this. So multiplied by 1.5 rupees 1,800. So my total value comes to 6 plus 3, 9 and 10. So 10,800 is my total value. Yes, Tejaswin, correct. Yes, Manivanan, correct. So I get my closing balance. Buy balance carried down 10,800. This is as per working note 2. Fine. Now, the total of 28,200 labor hours were worked in this. The factory workers on the same rate of pay. Now, what is this same rate of pay that we can calculate from this details given in the previous adjustment? So, working note 3, calculation of direct labor and factory overheads charged. So, firstly, we find out the labor rate, which is rupees 3,000 upon 1,200 hours. Because for this WIP valuation, they had given that labor cost paid is 3,000 and the labor hours worked is 1,200. So dividing the two, I get my labor rate also. Yes, so it is correct. Tejaswin, yes, Anurag, Manivanan, correct. So I'm getting this rate as 2.5 per labor hour. Now, using this rate, I will find out my labor cost charged. I will find out my production overheads charged. So, how many labor hours they gave? I have worked 28,200. 28,200 hours multiplied by. If I multiplied by 2.5, I'll get the labor cost. If I'll multiply by 1.5, I will get the overheads cost. Yes, Manivanan has given me 70,000. And 7,500. I think there should be some difference. It cannot be so less difference. 7,500. Please recheck. 28,200 into 1.5, 14,100. 14 is 42,300 is what I am getting. Forty-two, 300 and 7,500. Okay. Correct. So overheads charged by WIP 42,300 as per adjustment 1. So two factory overheads 42,300. Sorry, not 1. It is adjustment 3. Then labor cost charged. So to LCC, this is for the labor cost. It is 7,500. And since they have not asked, we have not prepared the labor account. So there is no second effect for labor. Correct? Okay. Manivanan is saying what? Yes, Manivanan. 7,500 and 42,300. Right. Now, all factory overheads incurred were posted. So we have also done that. Fine. So all data is complete. Now we have to find out material purchase, cost of goods which are completed, that is finished goods which are finished during the period. Then overhead supplied, we have already calculated this. Balance we have to calculate. Consumed, we have to calculate. Balance, we have to calculate underroad. So we have found out already material purchase. We have already found out overhead supplied, right? Now we'll find balancing figure in each account. Now in SLC, two figures are missing, so I cannot find it out immediately. I need production material used for production plus closing. So two things are missing. So this I cannot find out as of now. In WIP, you have opening, you have labor overheads, you have closing. No, you cannot find out from WIP also. Okay, so I get from FGC. How? Opening is given, units which are sold is given, closing is given. So what I get is the balancing figure from WIP, which will represent goods produced. So this balance is balance of goods produced 186. So this is close. So this will come here from FGC, the balance of goods produced. So now I will get the balancing figure of material which is consumed. Now I want material produced, material transferred for production balance. Tell me, students, how much is this balance? Students, balance of materials, which is used for production. Money one says 70. So this balance is 70, you are saying? 78. 78. Okay. Tejaswin has confirmed and even Manivanan has confirmed. So this is 78. So I get this. That is the material used in production. And so I will get my. So this is also tallied and closed. 24. 24. So 66. Correct. Balance here is 66 students. Please confirm. Anurag says 66. Yes. Great. So I've also got 66. It is confirmed by Anurag, by Tejaswin. Perfect. So students, we have completed this single entry type of cost accounting sum where with the incomplete data, we have done all the calculations. We have prepared the accounts which are there. And from this, we have derived our answers. I hope this is very, very clear to everyone. Okay, students, any questions, doubts with this? Now, after this, we go to the next part of this same chapter, which is reconciliation. Now, basically, what is this reconciliation? Why it is required? So understand this. Reconciliation is where you have similar balances, but in two separate books. So you need to reconfirm if both the balances are correct in their place. Yes, Tejaswin, you can ask.
Sir, usually there is a balancing figure of normal loss in store's ledger control account. So usually we transfer it to production overheads control account.
No.
But
Firstly, both these usually is not always correct, beta. First, usually that you'll always have the balance of loss is not correct. Second, it will be transferred to production overheads is not correct. We did this only in the previous sum because that was the specific instruction given. Had that instruction not been given and we are having a loss in any account, that is always assumed to be abnormal and always transferred to cost P&L. First thing.
but sir, if
Yeah.
but but sir, if specifically normal loss is written.
But if normal loss is written, then only you will transfer to overheads. Na?
Yes,
But if
sir,
that
that
is
was.
not written, and you find out the balance which is lost, it has to be transferred to cost P&L.
Yes, sir. Sir, in relation to that only, if sir we have normal loss in work in progress control account, FG control account, or CS control account, then sir, where will transfer?
That is why I'm saying, beta. So if you are having similar differences in the other accounts, which represents either loss or gain, that has to be transferred or routed through cost P&L. This is what exactly I'm trying to say.
Sir, normal loss specifically.
See, again, if it is normal loss, then WIP should go to finished goods because whatever is the normal loss has to be ultimately absorbed in your product, right?
Yes, sir.
So in that
And
case, beta, it is always given in the question where it has to be transferred. So don't worry. Wherever they will give the difference of normal loss, they will ask you or inform you where it has to be transferred.
okay, sir.
Correct.
Otherwise, sir, if Otherwise, sir, if it is not specified, then we will transfer it to finished goods, and from finished goods to COS, and ultimately in the sales costing P&L, the effect will be absorbed.
No, no, no. See, if it is normal loss, beta, and let us say it is transferred to your, in this case, in the previous example, it was transferred to factory overheads. So what ultimately happened? Through factory overheads, it got charged to the WIP because it got added in the balance of the amount to be transferred to WIP, correct?
Yes, sir.
And in WIP, it ultimately got added to the closing balance because if whatever is transferred to your product accounts, that will become part of closing balance.
Yes, sir.
It cannot directly, it cannot finally go to P&L because if it is finally going to P&L, then it is of no use.
Okay, sir. So it is absorbed in the product account itself.
It has to be, na? But again, see, all these sums are mathematics because they give you where the difference has to go, or they will give you one of the balance and the other balance you have to find out mathematically, right?
Yes, sir.
So here what it is appearing is not the actual treatment because here mathematically we are finding out that balance which is missing.
Okay,
Understand
sir.
this? Are you getting my point?
Yes, sir.
So the basic point what I want to make out from this is that from the accounting that we are doing here, you should not make any conceptual conclusion that okay, it means this, it means this. Because here what we are doing is as per that respective sum, whatever differences are appearing, we are giving the treatment as per the data which is there in the sum.
Okay, sir.
My point. So don't make your conclusions from this. Fine.
Okay, sir. Got it,
This is
sir.
something I want to tell you.
Thank you, sir.
Okay, but chalo then. Let us proceed. Now, students, in reconciliation, what we are supposed to do. So in cost accounts, either you have the cost accounts or you have your cost statement, which is the cost sheet. And in financial, you have your P&L account. Now both cost sheet also shows some profit. Your financial accounts also shows some net profit. Now it represents the net profit of the same person, which is the same entity, which is the same company. However, both these profit figures are different for reasons that cost sheet follows its principles, P&L follows accounting principles. Now in cost sheet, we considered ex, uh, expenses on absorption basis, whereas here expenses are considered on actual basis. Because here expenses are considered on absorption basis, your stock valuations of here and here will obviously be different because here stock values are derived taking actual expenses in P&L, and here in your cost sheet they are derived taking the estimated expenses or the expenses which are absorbed or charged. So the second difference creating item is this. Then there are certain items like financial expenses and financial incomes, which will never find place in cost sheet. And there are certain expenses in cost sheet like deemed cost or notional cost, which will again not find any existence in account because accounts only considers actual. Now, these are the various reasons because of which your cost sheet profit, that is a profit appearing in cost sheet, may not match with the profits as per your accounting P&L. And that is where the role of reconciliation kicks in. Now, for doing this reconciliation, we either prepare a statement like how we prepare for BRS. So we call it as profit reconciliation statement, where the same format of BRS is continued. First, you start with profit as per whatever, either cost sheet or P&L, whatever is given. In that, certain differences, as we have marked, these are the differences. Certain would be added, certain would be subtracted, and the next figure is your profit as per the other records, which may be P&L or cost sheet. So this is our first format. At this level, however, more commonly they ask you to follow the second format, which is the memorandum reconciliation account. Now in memorandum reconciliation account, if your opening balance or the starting point is a profit like here, and let us say it is profit as per cost sheet. So profit always has a credit balance, so we should write it on the credit side. So I will write by profit as per cost sheet. Now, whatever you have identified as the differences which are to be added, so you have to put it on the credit side by whatever are the names of differences. So automatically it will get added in cost sheet, profit, and whatever you have identified as to be subtracted, you'll put it on the debit side by writing 2 and the names. So automatically these items will get subtracted from the profit as per cost sheet. And then the balance which you are going to be left with is your profit as per the other records. So automatically it will be the profit as per P&L. So your this memorandum reconciliation account format is generally the format which is expected at professional level, and it is based on the statement format only, with the difference that in statement you prepare a vertical format, whereas in case of accounts you prepare your ledger account format. Now interestingly, at times your question may have a balance of loss. So in statement we will say loss as per profit and loss, let us say. Again we determine add and less, and we find out the other profit or loss as per cost sheet, right? Now, in the same thing, for the same question, where you have to prepare the reconciliation format, if the opening balance is a loss, loss has a debit balance. So you start from here to loss as per P&L. You'll put it here. Whatever you have identified as add, you'll put it on the debit side so that automatically it will get added. Whatever you have identified as less, you'll put it on the credit side so that it gets subtracted. And then the balancing figure, which will be your other profit. So if it is loss, it will come on this side. So you'll write by loss as per cost sheet. If by chance this is profit, so it will come on this side by profit as per cost sheet. So depending upon what the other balance comes to, it may be on any of these sides. But the important point is where the question is of reconciliation of losses, you will write your opening balance or the starting loss on the debit side because losses have debit balance. So just remember this, because in statement format, it will always be in vertical, so it makes no difference. But in case of reconciliation, the first balance, if it is profit, it should be put on the credit side and then add on the credit side and less on the debit side. If it is loss, you put it on the debit side and then add will come on the debit side and less items will come on the credit side. So just keep this difference in mind so that you are through with the format and the final answer. Okay, now let us go to question 4. What it says, prepare the reconciliation statement. But as I said, just for practice, we'll prepare the account because that is something new for us. Now they are saying profit as per costing is your starting point, and then they have identified the differences. And from this, you will find out the profit as per the other. In fact, see, they have asked you to prepare reconciliation account only. ठीक है. So there is some overriding. You just ignore this. So basically, you have to prepare the reconciliation. The data is starting with profit as per cost accounts. I'm following the reconciliation account format. Okay. Now, since my starting point is profit, I'll write it on the credit side by cost sheet 145, 500. Now, for each difference, we have to identify whether it has to be added or subtracted. Now, see, this is the first type of sum that you may get. What is this first type of sum? In this question, the differences are given to you, identified. You have to simply do the reconciliation by deciding add or less, right? Now, first is your works overheads, which are under absorbed. Now, first understand what is the effect of this under over absorption. Absorption or recovery, these are the terms which you have heard for the first time only in this subject of costing. So only in costing, we have the concept of charging the expense. Now, when they are saying undercharging, under recovery, or overcharging, over absorption, over recovery, it means they are talking of the costing side. Just keep this in mind. So when the question says that this difference is representing works overheads, which are undercharged, under recovered, in that particular case, I have to understand that this expense, which is the works overheads, is less charged in cost sheet. Because as I said, this recovery, this absorption happens only in costing. So if they are saying undercharged, under recovered, it means in cost sheet, you have charged it less. Now, if it is charged less in cost sheet, what is the impact? So I always use this. So both these hands represents my profit. One is profit as per P&L, one is profit as per cost sheet. Now they are saying that some amount is under absorbed. Now, if it is under absorbed, it means it is impacting cost sheet. How it is impacting cost sheet? Under absorbed means the expense is charged less. Please understand. So expense is less, but my these hands represents profits. So if expenses are less in cost sheet, the impact is profit is higher. So my profit is higher in cost sheet. This is what is the impact of first adjustment. So first you should be able to identify this, that what is the impact of this adjustment on my profits. So firstly, they have used the word recovery. So it is impacting cost sheet only. And in the costing, they are saying it is under recovered. It means the expenses are charged less. If expenses are charged less, so the impact is my profit is more in cost sheet because expenses are less. Since expenses are less and profit is more, now we will decide what should be done in reconciliation. For this, see what is the starting point. In this sum, my starting point is cost sheet only. Since starting point is cost sheet, which is higher, so in order to reconcile, I'll have to step down. So I will come down to my financial profit, and that is where I'll have to subtract. Is this clear? So I'll have to subtract. Next, second is of administration overheads under absorbed. Again, it is saying under absorbed means what? Expenses are less in cost sheet. If expenses are less in cost sheet, it means my costing profit is inflated. So in order to reconcile, I'll have to come down again less. Next is selling expenses are over absorbed. Now, if expenses are over absorbed, again, absorption is happening in costing. What is the effect? Because the expenses are more, over means expenses are higher in cost sheet. It means my costing profit is appearing as lower because of this difference. Now, since my costing profit is lower, my starting point in this sum is costing profit. So I have to start from here. I have to reach upwards. So I have to add this difference. Then comes bad debts. Now, bad debts is again an item which is only in one books, which is the financial books. So now I'll see what is the impact on financial. So this bad debts is an expense or a loss, and it is appearing only in my financial books. So the impact is my financial profit is appearing as less because of this bad debts. Now, in order to reconcile, my starting point is cost sheet, so I have to come down. Next, now this you have to be very cautious. Overvaluation. Now, this valuation difference is in the stocks. I've already informed you why this valuation difference is coming. Now, we have to adjust this difference also. So what is important is first it is over, that is excess valuation, and it is of a debit item because it is of opening stock. So opening stock is a debit item, and this has happened in cost. Now, so we have to look at what is the impact in my costing. Sorry, 1 second, students. Regularly, some people are posting answers. So 1 second. Okay. Now, I have to see the impact in my cost sheet. What is the impact? Please understand, they are saying opening stock is overvalued. So opening is a debit item. And if it is a debit item and debit item is more, it means my profit is less because opening is a debit item. And if debit item is overvalued, it means your debit side is overvalued. So the profit would be appearing as less, right? Now I have to reconcile. My starting point here is cost sheet. I have to climb upwards. So I will have to add. Next is overvaluation. Now it is of closing and it is again in cost sheet. Now, the difference is in closing stock. Closing stock is a credit item. And they are saying what is the difference? The closing stock is overvalued in cost sheet. Now, if closing stock is overvalued in cost sheet and closing stock is a credit item, so if credit is more, it means my costing profit is appearing as more because of this adjustment or difference. If costing profit is appearing as more, now you have to see what is your starting point. In this, my starting point is costing only. I have to climb downwards. Next, interest earned, rent received. Both these are incomes. These incomes appear only in financial books. They do not appear in cost books. Costs do not consider these items. Now, because of this interest received, rent received, what has happened? My financial profit is appearing as higher. My starting point is cost sheet. I have to climb upwards. And then preliminary expenses, which is written off. Preliminary expense again is a financial item. So the impact has to be only in financial books. And since it is a debit item, my financial profit will be lesser because I have debited this in financial books. So my financial profit is less. Now, in order to reconcile, I have to see the starting point. My starting point is cost profit. I have to climb downwards. So I will also subtract. So first you have to identify whether add or less. And once you identify this, now we will prepare our reconciliation, either statement or account as required. Here we are preparing the ledger account. So works overhead under absorb, administration overhead under absorb, both are less. I had already informed you whatever is less should be put on the other side. So I will write 2 administration overheads 9,500 22,750. Then I have selling overheads, which is over absorbed, for which my treatment is at. So it will be put on the same side where I put the original profit. Something in the chat. Yes, correct, Tejaswin. So that is why I prefer this hand format because it is very easy. Otherwise, rightly pointed out by you, it would have been required to be marked up. Yes, Nanda Kishore, very good. So even before I could complete, I have the answers. The first answer of this question was, I think, given by Tejaswin. He has already given the answer, and then even Nanda Kishore has given the answer. Let's see if it matches. That debts written off. I have to subtract it, so I'll put it on the other side. Then overvaluation opening stock 15,000 add, so I'll put it on the same side. Overvaluation closing stock opposite side. Interest received, rent received. Preliminary expenses written off. So, now, the balance represents my profit as per the other books, which is my financial P&L. Now, already I have received this answer. I want others to reconfirm. I'll just take a 2 minutes break. Others, please reconfirm. Great. So it has been confirmed by many students that this is what is the final answer, right? So let us go to the next type of question. Now in this question, again, we have to do reconciliation, but the format is different. How it is different? In this question, you will find that they have already given P&L and some other details are given. Now in this question, what is important is, in the previous question, the difference between costing and accounts was already identified. Here, you have to identify the difference. This is what is the difference in this question. So as a typical P&L purchase closing, now closing they have given on the debit side, that is why they have put it as less. There may not be opening because they have not given. Then direct wages, works expense, selling expense, administration expense, debris. And on the credit side, sales, discount, profit and loss. Now they are saying the profit as per cost accounts is this. So profit as per costing is known. However, you have to reconcile both to find out whether both the profits are correct in their respective ends And this you'll get to know once you do reconciliation. So now what are the difference creating values they have given? So they are saying first is that the closing stock value is different. So what you have considered here is your accounting value. We have a different value. Then obviously the work expense which are charged have a different ways of charging. So you have different overheads charged differently. Also the depreciation in cost account is this. Now with this details, you need to do the reconciliation. Also, what is important to notice, these two are purely financial items which will not appear in cost sheet. So we have to make adjustment for this also. So what is not requiring adjustment is purchase, sales, because they are as it is, no change. Wages also, no change. Other than these, all other adjustments or all other items which are given over here requires your adjustment. So if I have to simply prepare the reconciliation here itself, so I have by profit as per financial P&L. So my starting point is this financial profit, which is 2,03,000. And you have the other details. Now we go one by one. So I start with this. The credit items, which is discount received, profit and sale. What is the impact? Now, both these are only financial items that do not appear in cost sheet. And the impact is both these have increased the financial profit because both these are the revenues given in the P&L. Now, since they have increased the financial profit, so this is the level my financial profit is higher as compared to my costing profit. Now, in this question, my starting point is financial profit. So for reconciliation, I have to climb down. So both these things I will subtract. Since I have to subtract, I'll put it on the debit side. So I will write to discount received to profit on sale of land. Tejaswin has asked a very good question. Sir, here, do we have to prepare a cost sheet before doing the reconciliation? The answer is not. No. Why? Why? I'll tell you. Because cost sheet is required whenever some cost data is not there. And mainly the cost data that you require for why you prepare cost sheet for cost data is this closing. Because closing value is the only value which you need to identify by preparing cost sheet and using the formula of calculating closing balance value, which we studied in the previous class also when we were dealing with cost sheet sums. Here, since the closing stock value of costing is given, you will not be required to prepare cost sheet. Had this data been not given, this, then we were required to prepare the cost sheet. But otherwise here, there is no need to prepare cost sheet because all relevant data of cost sheet are given. Fine, beta? So this is a difference which you should know. See, you can prepare cost sheet here, but it will be wastage of time because no new information will come out from cost sheet. All costing information is there in front of your screens, right? And sir, admin expenses here is in relation to production or general, but that's what I'm saying. So why it matters? When you don't have to prepare cost sheet, it will not matter whether it is relating to general or what. But if you look at the adjustment and if you want to find out, I believe it is related to production. Why? Because it is charged on the basis of per unit. So where it is charged on the basis of per unit of production, it will be related to production. If it is not charged on the basis of per unit of production, then it will be general. So if nothing is given, you have to treat it as related to production. Here, but we'll have to, they are saying it is charged per unit. Now, which units are given? Production units? No. So we have to charge it on the basis of sales. See, production units are not given. It will be charged on the basis of sales. So here it will be general beta. Yes, correct. You have also identified it correctly. Had there been production units and we were charging it on production unit basis, in that case, we would have considered it as production related administration. Okay. Now, coming on the debit side, difference in closing. Your accounts is taking as 4,800. We are taking as 42,800. So difference is 2,000. And what is this difference? This is overvaluation of closing stock in cost accounts by 2,000. So this is our difference, correct? Now, once you identify this difference, now you will get to do the reconciliation. So what is this difference? This is overvaluation in your cost sheet. Now it is a closing balance. Closing is a trade balance. So if trade is overvalued, the profit will be higher. So where the profit is higher in cost sheet. What is my starting point? My starting point is P&L profit. So what we have to do is we have to add. And if it is to be added, it has to be put on the same side of profit, that is the credit side. Closing stock. Next, work expenses as per your cost accounts is 100% of direct wages. Direct wages is 1,05,000. So my 100% of direct wages is 1,05,000. Now the work expenses in P&L is 121. So what is the impact? The impact is it is under absorption. How much is under absorption? 105 minus 121. So it is 16,300, which is the under absorption. Right? Now again, what to do if it is under absorption? First, understand the impact of under absorption. Under absorption means the expenses are less in cost sheet. If the expenses are less in cost sheet, it means costing profit is higher. Right? Your starting point is financial in this sum. So you have to climb upwards. So we have to add. Add means put it on the same side. By work expenses under absorbed. 16,300. Then selling overheads. How much it is? It is 10% of sales. So let me write it like this: selling overheads and then administration. It is 10% of sales. So how much it is coming? It is coming as 75,000. How much is taken in your financial P&L? 71. So what is the impact? The impact is over absorption of 4,000. Similarly, administration overheads is 1 per unit. Here, the units are of sales. So 50,000 is my administration overheads, which is charged. How much is there? It is 53. So again, my adjustment will become under absorption by 3,400. Now, expenses are over absorbed in cost sheet. So expenses are over means profit of cost sheet is less. Your starting point in this case is financial. You have to come down. So selling overheads over absorbed and administration overheads again under absorbed. Correct? Then comes the next point, that is depreciation. In costing, it is 8. In financial, it is 11. So again, there is under absorption of 3000. And for under absorption, now you will do balancing to find out your profit as per. Now they've already given you the profit. So now you have to reconfirm whether your profit is matching. Right, students? Are you getting this? Okay. Let me take you to our another topic which is covered here, which is they've asked you to even do job batch and unit costing. We did the cost sheet sums in the previous class, though I've taken one more lengthy sum. But before that, let me take you to something which is different. So you also get a conceptual based question, which is like this. So let us take up this conceptual based question. Anurag is saying you have taken depreciation on debit side. Okay, so you mean to say it should come on the credit side. See, under absorption is there. Huh? So under absorption is coming on the debit side only, Anurag. See, when I'm saying expenses are under absorbed, they are under absorbed means in costing, you are putting the expenses as less. So what will happen? Your profit will go up. If your profit will go up, which profit is going up? Cost sheet. Your starting point is financial. What you have to do? Add. You're right, Anurag. I have to show depreciation under absorbed. Correct, Anurag. Thank you. Now, let us go to this conceptual sum from job batch unit costing. So what is the question? Identify the method of costing in following cases and give one example of industry where this method is followed. Yes. Now, you have to identify which method is followed in these cases, and you have to give the name of industry where this method is followed. So both things are asked. Firstly, identify the method. Second, give the name of the industry where this method is applied. Tell me. Cost of each job is to be ascertained separately. It is suitable in all cases where work is undertaken on receiving a customer's order. So where you are doing costing for each job separately, yes, Manivanan, it is job costing. So method is job costing. Now, what are the industries? There are so many industries. So giving you the most common example of the industry is automobile. Because in automobile, the big automobile companies like Tata's, Mahindras, they regularly give their independent small part manufacturing to small and medium size industries, and they give them that particular job or work order, and on the basis of that they have to do the costing for each of the parts given to them separately. So that is where job costing is commonly utilized. Going to next. cost of completing each stage of work. So you have to ascertain cost stage wise as the work goes on getting completed. You have to ascertain stage wise. So which method will be applied here, students? Stage wise costing. Which method? It is process costing. Common example is your oil refineries. So the industry in which it is very commonly used, yes, money one, correct. And the industry is oil refineries. Next, each group is treated as unit of cost. So what is now treated as cost? Each group, and thus separately costed. Here, cost per unit is determined by dividing the total cost of the group by the number of units produced. So group here means batches. So you are manufacturing in batches. And yes, again, rightly pointed out by you, Manivanan. So the method that is to be adopted over here is batch, and the industry is your pharma industry, the drugs and pharmaceutical industry. Because here, when you buy any medicine, you'll find the batch number on that. In fact, even your FMCG products, all these chips and all these items, they are manufactured in batches. And that is why on the wrapper, you will find in the details, you will find the batch number also. And where there is a combination where you are using two or more methods at the same time, then it is multiple. Now for multiple, again, the example is of car dealers or the final car vendors, because car is manufactured. Firstly, the costing is done using batch, and then for whatever are the independent changes to be done to a car, it is job. Another example of this is construction, most common. So wherever you buy flat, firstly, it is the contract costing that is used because it is a construction contract. And then again, for independent flats, whatever different things you are putting in your flat, so that has to be done separately because that is only for you. So this is where two methods are used. So it becomes a multiple costing approach. Correct. Correct, Maniman. Right? Now we go to the cost sheet. Here, you have to simply, now we know the format of cost sheet. We have to simply ensure that they are put in the right places. Correct? So where this will come in the first part in cost sheet. That is what is called as raw material consumed. Even this will come in raw material consumed. Then wages is paid to factory workers. This will come in your direct labor. Then contribution to provident fund, again, if this is of direct workers, it will go in direct labor. So this is direct material, which is RMC. This is direct labor. Now, most important, higher charges paid for hiring of the machine, which is required specifically for this work. So this is direct expense. Correct? Then, now amount paid for power and fuel. Now, generally, power and fuel are required for running the machine. And if it is not identifiable with your product, it goes to production overheads. If it is identifiable with your product, it will go to direct expense. So that is subjective. Key, depending upon what is the assumption, your answer will be either production overheads or direct expense. Then amount paid for purchase of molds and patterns, life is equivalent to 4 years. Now we know when the life is 4 years, what you do is you apportion it in 4 years by dividing it by 4. So you get the proportionate depreciation or apportion amount of the molds and dies. Now very important is molds and dies are required to make the product. Now, generally, they have a direct relation with your product and production. That is why they come in direct expenses. Next, job work paid. So you are getting some part of your work done from outside. So again, job work, what you are doing will come in direct expenses. Next, lease rent, which is paid for production assets. No doubt it is production or factory overheads. Production overheads, administration overheads, production overheads. selling and distribution overheads. So this is the depreciation cost of all these assets. Depending upon the nature and use of the assets, you will put it in one or the other overheads. Correct? I hope all these bifurcations are clear with everyone. Then salary paid to supervisors. Generally, supervisors are required in factory. So salary paid to supervisors will always become part of your production overheads or factory overheads. Similarly, repairs maintenance for plant and machinery will be this, and for sales building will be selling and distribution. Next is insurance premium, same production overheads, production overheads. Now this is interesting. Insurance premium, which you have paid for insuring your stock of raw material and WIP. Again, it is production overheads, right? Had it been of finished goods, we may have considered it in selling and administration overheads. Next, expenses paid for quality control and quality checks. Now, whenever these expenses are given, we open a separate head. Along with production overheads, we open a separate head, which is of quality control. Both these will fall in quality control, and they will be put immediately after production overheads. Next, my other category would be R&D. So I will again have another category like quality control. I should have one more category of R&D expenses because these are significant. So you have production overheads, you have quality control, you have R&D. Actually, these are all related to production, but now as per our latest cost sheet format that we are following, if quality control and R&D are given specifically, you have to show it as separate cost heads. Then expenses paid for administration. Now be very clear what they are saying. Expenses are paid for administration, but it is administration of factory work. Now, when they are saying expenses are for administration, the question is whether it will be administration overheads or whether it will go to factory overheads. So this is where you have to understand we have two types of administration expenses. One is administration relating to production and one is general. So this will be administration related to production. Now, salary paid. Now, salary paid for production control manager. Again, this is administration overheads related to production. Finance, this is administration overheads general, and this is selling and distribution, right? Salary paid to general manager, where it will come. Salary paid to general manager should go to administration overheads general. Packing cost. Manivanan has some question. Yes, Manivanan, correct. Now, there are two types of packing. One is primary and one is secondary. Primary is required. That is what is the wrapping on the product itself. So your final product has this wrapping. That is the primary packing. And the boxes in which these products are packed for their delivery is called as secondary packing. Now the question is where to classify these costs in your cost sheet. One is primary packing, one is secondary packing. Tell me, students. Now, as far as primary packing is concerned, primary packing is required when your product is complete. So this you should add generally after the factory overheads. Now here we have factory overheads, we have quality control, we have your R&D expenses. Plus, we also have administration related to production. After that, you should add it separately as the primary packing cost because your final product will be completed only after doing the primary packing. So this primary packing will again appear as a separate head of cost. This should go in selling and distribution overheads. Correct? Administration overheads general. Administration overheads general. Stocks, opening stock, closing stock. WIP, we know this will go after your factory cost. This is for determining factory cost, and this will come after your administration overheads, administration for production. You get cost of production, and after cost of production, you do add less of finished goods to get cost of goods sold. Now they are saying, due to delay in picking up cargo, you have to pay 15,000 as demurrage. Now see, we have to determine whether that particular cost is normal or abnormal. If it is a delay, it is mistake of one of your officials. So we consider this as our abnormal cost. This is the general treatment because this should not happen. It has happened because of our mistake. If it is happening because of our mistake, it should not be added to cost and it will go directly to cost P and L. So this will be the treatment of demurrage cost. So this is how all the treatments would be done. I'm just cross-verifying to check if I have missed out any. No. So all things are done. So this is a very interesting question, students, where you have to make the lengthy cost sheet with all these details. And this is where you need to classify it under the correct headings. That's it. Otherwise, there is nothing very technical in this, but you should classify it in the proper headings and there should be a proper flow or sequence. So my proper sequence would be RMC, direct labor, direct expense. This will give me prime cost. Then my production overheads, quality control, then my R&D, primary packing. This will give me my factory costs in which I'll do opening WIP, closing WIP. This will be my cost of production. Sorry. Opening WIP, closing WIP. This will be my factory cost. Then my administration related to production. This will be my cost of production. Add opening FG, less closing FG. This is my cost of goods sold. And then adding administration general and S&D. This is my COS. So this will be the flow of your cost sheet. And this is how you will determine these main heads which has been asked in the question. So students, that is all about this topic of cost accounts and of job, batch, and unit costing. So thank you very much. Let us connect again. And again, the same appeal. Please keep revising, study systematically, and solve all the material that is hosted on our BOS portal. That will be very, very, very helpful to you in getting the best marks and clearing this attempt itself. So thank you, students. Thank you very, very much. Yes, sir. Over from my side. Thank you, Manishi. Good day, Manishi.